Alrighty. So first and foremost, I just want to say welcome to the Financial Speculator series. Before I begin, I want to reset your expectations. Trading is not about predicting the market, as many believe. It's more so about managing risk and managing yourself. Most people fail not because they don't understand charts, but because they don't understand psychology, position sizing, and probability. So in this course, we are not chasing quick wins. We are building a repeatable decision making process. A few things you'll learn. First, how to think in probabilities. Second, how to manage downside risk. Third, how to build a structured trading plan. And last but not least, how to control your emotions under pressure. If you're looking for shortcuts, I'm just going to tell you right now, this is not going to be for you. But if you're trying to treat trading as a skill, like a profession, then let's just get right into it. I know I listed out everything we're going to be going over, first, second, third, and fourth. That's not going to be in order. First, we're just going to go over what I think personally is the most important part of trading, which is how to control your emotions under pressure. So yeah, let's just dive right into it. And before I get too deep into it, I'm just going to give some credentials. So this is my month currently in February of 2026. Um, that's pretty much like an average month for me. It's not really much to it. Pretty boring, honestly. And then through the course of my prop firm trading, I've passed 57 evaluations. The good thing about prop firms is you're not really putting down your own personal capital. So it's very safe getting into it. And another thing that you will learn eventually later on in your journey is that the rules actually are really good for you, especially when you start beginning to trade your personal capital and you scale into a live account. And then another thing to keep in mind is from showing success, starting at demo, then starting on a funded account, then finally getting to your own live accounts and performing on your live accounts. You can see that that like process right there is very good because then you can just fund money into your live account from your funded accounts on top of all the plus sides of trading, right? I'm not some guru, I'm not some multi-millionaire, but I am able to take care of myself, which is a plus side without having to work a job anymore. I have my own apartment, I have a car, I have a girl, I'm just a normal person, I'm literally just like you. There's nothing special about me, and I definitely just want to make this so I can help someone out who went through certain things that I went through when I began this process. So that's enough of the boring stuff. Let's just dive right into it. So just to preface, a lot of things in trading are outside of the money aspect. In my personal opinion, majority of trading is outside of the money aspect. So just to start, what comes to your mind when you think of trading? And I put a big eraser here because I want you to completely erase what you think you know, what you think you've learned, and everything you've already done in the market. Like, I'm going to be so honest. It's like throughout this series, I'm hoping to pretty much open that third eye. And once you've just given yourself a complete blank slate mentally, let me make this image for you. Trading is not the stock market. Trading is not longing or shorting. Trading is a labyrinth within a jungle that exhibits twists, turns, uncertainty, joy, depression, lies, manipulation, anxiety, desperation, competition, hope, and euphoria, among a large list of other things. A place where the only valid metric of a human's decisions can be deduced to fear and greed, that metric alone within yourself being the compass that has produced winners who conquered the maze and losers who stay in it forever. And And I write down below that if you have never placed a trade, this will make sense. This won't make sense yet. But if you are moderately accustomed to the market environment, sitting in front of a chart, trading opens, trading macros, looking at price movements, if you are accustomed to the environment, the headspace, the zone you are in, I guarantee you understand what I'm talking about. And that's probably why you're taking this course. So before we get into where and when you should start, I just want to dive a little bit into psychology. And just keep in mind, this whole first video is going to be my first video on psychology for this course. So we're going to start off with Maslow's hierarchy of needs, a little bit of elementary psychology, understanding that your mind is pretty much geared towards what's first, what's pretty much not what need is not met. So you can't reach higher tiers in the hierarchy of needs if the lower tiers of needs aren't met. So the bottom tier being physiological needs, second layer up, safety and security, third being love and belonging, fourth being self-esteem, and the top tier being self-actualization. And this is just a schematic created by Abraham Maslow, um, who pretty much just quantifies how we think and what are limiting things on our thought processes, if I'm even pronouncing that right, based off of what's in front of us, what needs need to be met first. And I'm going to go over how this is tied to trading. So first and foremost, physiological needs, that be rent money, grocery, emergency funds. So if those needs aren't being taken care of, you should probably just stick to demo, um, because you're setting yourself up for a lot of emotions and uncertainty when taking on something that is inherently risky. Um, if you're trading with funds that you need to survive, and that is also financially immature, if you will, and at the same time, it isn't smart. It isn't wise. Don't convince yourself that you want this bad enough, and that's why you're neglecting what you need to survive. I don't care if you're yeah, like I don't care what you hear online with people saying, "Oh, like I traded my way out of debt. I spent my last 20, 30, 50, however much a eval is, or however last like dollars they've had on an account or on a trade." That's mainly just to get you to view what they're watching, and that's mainly to get you to fall into the aesthetic of, oh, I made it from nothing. Oh, like the idea, the dopamine that comes with, oh, from literally a few bucks, I scaled to an account and then got a few bands for a payout. Don't fall into that. Be realistic and have grace on yourself if you're in this position. Like, really, like, take a step back, bro. Breathe. Take care of your survival. And the likely behaviors of this would be emotional trading, panic selling, revenge trading, over leveraging. So, trying to trade, being in this sector of needs, you're already setting yourself up for failure. Um, when your survival is threatened, the brain prioritizes avoiding loss over rational analysis. So, we'll get into being able to think clearly over here. I got this diagram and everything. But let me just keep it moving forward. So above that would be safety and security. This is where most responsible traders should operate. Here, trading becomes about wealth preservation, risk management, diversification, long-term stability. Traders here use position sizing, respect stop losses, avoid all-in trades. They are focused on financial security and not thrills. So as you can see, just one tier up from having everything on the baseline needs, like an emergency fund, groceries, rent, you're already in a space where you can go about this in a healthy manner. You don't have to be in a perfect position to start. And just gonna burst your bubble. It's never gonna be a perfect time. You're just gonna have to step up and take action. Um, you're you're like think about it. You could be demoing for 3 months, and then you step onto a live account or a funded account or an eval, and you take a loss. Everything you experience within that first loss is more productive than what you did in the past 3 months, given that you just took initiative, you took action, you took a risk, and you got to gain the experience from that outcome, regardless of what came out about it. And you got to see who you were, and you got to dissect who you were post outcome, right? So I want to gear everyone to get here first prior to touching a chart. You really need the groundwork to be able to be rational. There's no point in trying to be a pro at something when you don't even have cleats, you don't even have a basketball, you don't even have access to a court, a pool, whatever it may be for you. You need to get to a point where you have access to take the right steps. Top being love and belonging. I'm just going to go over these two because this is more so about validation seeking, and these are the tiers that you may experience. I don't know where you're at in your trading journey, but you tend to experience more the further you get in. Like hearing that, you're probably like, duh. But in regards to finding yourself, who you are, and who you are relative to the people around you and what you're seeing around you in the space, um, overcoming this is definitely a video on its own. It's an obstacle, but overall you will. So just going over it, love and belonging. At this level, motivation shifts socially, joining trading communities, following influencers, wanting to be right publicly, fear of missing out. This is where herd behavior emerges in markets, bubbles, meme stocks, right? So this is kind of just the hype, the validation seeking aspect of it. This is pretty much the tier in your head, honestly, regardless of whichever level, except for self actualization, where you're grounded in yourself, and we'll get into that, where you're experiencing the herd mentality. You're experiencing, oh, I should have got that trade. Oh, I need to always be in a Discord group talking to people. You don't need a community. Excuse my language, but I shit you not. You are way better off going your own path. And that's probably going to be scary at first. Definitely want someone to talk to, but being in a group, hearing what people are thinking, just going to cause you to question your performance, question your decisions, question yourself. Subconsciously, you won't even have control over it. It's just the things that you're exposing your eyes and your ears to will just narrow its way into your mind and your process. And as soon as you strip that outside of your process, the further and closer you are to leveling up. The self-esteem, right? Here trading becomes about proving intelligence, beating the market, status and recognition, posting wins on social media. This is ego-driven trading, oversizing positions, refusing to admit losses, confirmation bias. So these are all things that you're going to experience in your journey. You're going to experience, oh, I want to be this dude on social media. I'm not even here for social media. I'm mainly here because I've been told that I'm good at teaching. Like, if anything, my ability to communicate is one of my pros. And I just wanted to take advantage of that skill, like anyone else in my position would, to use it and maybe monetize it. And another thing you're going to go through is confirmation bias. That's another thing. So you'll just experience um, thinking that you're right and wanting something to happen, and then realizing that the market's not going to play to what you think is going to happen. It's not going to play to what you want is going to happen. When you win and it hits, it's said in many trading books. I can go over a handful of them where the worst thing that can happen to a trader, even in market wizards, pretty much every wizard experienced that the worst situation for them was to get extremely lucky. Why? Because that sense of grandiosity, if that's even a word, and euphoria is what takes them out of the process that they were in, the process that they developed, the trading strategy they built, what kept them grounded in consistency. That euphoria just completely took their brain out of the zone. And confirmation bias is hand in hand with that. So you just got to avoid validation seeking, and you got to avoid trying to make it big, and you got to be aware of these things. Overall, I'm preaching awareness. Being aware of what's going on in your mind will give you strength in trading and, more importantly, outside of trading. All right, self-actualization. At the highest level, trading becomes a craft. It becomes a discipline, a system of a master, a path to personal growth. Traders here focus on process over outcome, accepting losses calmly, view markets probabilistically, continuously improve. They trade from stability, not desperation or ego. And when I hear that they trade from stability, not desperation or ego, ha, ha. When I hear we trade from stability, not desperation or ego, that pretty much means that we do not render on the fear or greed index. And that you're outside of the herd mentality. You're outside of what most people and most fail. You're outside of how they think. You can think as a contrarian in the market, someone who's against trend. You can go pro trend. You could be the best pro trend. You can be the best reversal trader. We'll get into technicals in a different video. But overall, you're outside of the normal things that can get in the way of the mediocre individual, the mediocre Joe Schmo who's taking on the market. And this is a zone where you know who you are. And the way to get to this zone is pretty much in this next part we're about to go over to. So when and where should I start? When you are physiologically capable of grounding yourself in the process. So when you're at the survival level, um, you're not able to trust rational analysis, right? And that kind of coincides with you're not able to think rationally. This is kind of when your amygdala is firing, and your prefrontal cortex is kind of taking a vacation, and you're just in a fearful, scary, irrational, emotionally heightened zone, right? So how can you ground yourself in something that's process driven, something that's just calm, slow, boring, if you're just bouncing off the walls mentally, right? So making sure that your ends are met outside of trading, financially, relationship wise, physically, whatever that's met, whatever that means for you, that's when you are at the perfect spot to ground yourself in a trading process where safety and security needs are not at the forefront of your life. And that kind of goes hand in hand with physiological needs, right? When your identity beats to its own drum. So when you're no longer thinking, oh, I need to have that, whatever it is for you, I don't care. Where words, circumstances, and people in the background of your mind, stays in the background of your mind and emotions. So that pretty much means that you're just unfazed. And then when self mastery is understood as a byproduct of discipline over time. So overall, the goal here is to make you a financial speculator, a professional financial speculator. And that's not going to happen overnight. That's not going to be something that you can just play affirmations in your head to get to. That's going to be showing up every day. That's going to be a painful, grueling process. And you tell yourself you want it, but if you actually want it, you know that the process is just, it is what it is, and it's going to be something that you're going to fall into. And you're going to fall into it pretty effortlessly if you actually want it. So I have this graph here that pretty much shows how you would get to X coordinate for mastery. And that's discipline over time. And discipline over time produces the curve of consistency where you're eventually going to arrive at mastery. So if you just show up every day, pretty much, if you do the due diligence, you do what needs to be done, you don't make any excuses, you're grounded in knowing that over time, since I am doing the right things, since I am showing up, I'm going to get there. Fear dissipates when you take action. There's not going to be anything in your way. When you understand that, win, loss, whatever, I showed up, I stuck to my rules, I did what was right, I did what was, you build the habits over time. You did it. You do it every day. And you do it every day, you do it every day, you do it every day. You're not here for the aesthetic. You're not here for bragging rights. You're not here because you wanted to say, "Oh, look at me, I got this." You're you're here to master yourself. You're here for the bread. Let's keep it real. But that can't be within your day-to-day process. That mental mode can't be. Your mental mode needs to be grounded. And this is where your identity comes in. And this is where we're going to strip away everything you knew about trading. This is where you're going to understand, you're going to throw away all of that. You're going to throw away who you are right now. Forget who you are right now. This is who you are now. This is who you are switching to today as we speak right now. So when your physiological components are met and your identity is unwavered, you can shift your focal to the process easily. So forget what you do. Oh, I went to the gym. Oh, the gym's good. But, oh, I ate this. I did that. I tried this. I played this sport. I went to this school. Drop it. None of that is your identity. Not anymore. If you really want this route, none of that is your identity. Your identity is the process. And not just the process in trading, but the process in everything you want to get good at in your life, everything you want to be in your life. And you can take this process and apply it to everything. Specifically for trading, understand that when you just focus your mind on the process, things outside of it become quiet. People, situations, your past, the needs, your future. Kobe Bryant stated when he stepped on the court, everything went away. Why? Because he was just in his process. He knew how to execute through years and years and hours and thousands of hours, sleepless nights, endless nights of just being in the process. So when it came time to him executing, everything turned off and he was just automatic. And that's an achievement and that's an ability only achieved through the process. And in trading specifically, how you have to look at it is, okay, I'm either going to step on this thing for however long, take a win, take a loss, whatever happens, that is pretty much the only part of the process you cannot control nor try to control. Chasing certainty in this will fatigue you. And how can you perform when you're mentally fatigued? When the only muscle that you really need to make a living out of this is your mind, why would you fatigue that in a day when this thing is a marathon for the rest of your life? It doesn't make sense. So despite the outcome, you're going to learn, you're going to journal, you're going to backtest, you're going to do whatever you need to do, right? You're going to iterate. And what I mean by iterate is you're going to see, okay, this worked. Let's apply that again. This didn't work. We're not doing that again. And as soon as you've got all your P's and Q's from what came out from the outcome that day, you're going to take it to the next day. And it's repeatable, daily, monthly, weekly, whatever you're trading. If you're a day trader, position trader, swing trader, quarterly trader, whatever, right? You're just going to repeat that. Oh, it didn't work this quarter, but it's working that quarter. Okay, for next Q, whatever, we're not doing that. We're doing this. All right. So when you slip out of the process, it can happen because of a few things. If you rush, you'll fall into a counterintuitive process. You can't rush. You literally, like, how do I say this better? You can't rush a masterpiece. If you rushed Michelangelo painting the Sistine Chapel, guess what? There's no fucking Sistine Chapel. Excuse my French. that would be non-existent. It wouldn't be beautiful. It would be gross. It would be rushed. Everyone would look at this and be like, "Why does this look so off? Why does it look like he did this in 2 seconds? Why are there stick figures on the ceiling of this beautiful church?" No, it took time. If you lack discipline, you'll forget the process and undermine it. So if you can't tell yourself you're doing something and you don't do what you told yourself you'd do, if you set up a schedule and can't do it, that's a whole separate issue on its own, and I could talk about that later. But you'll forget the process and you'll undermine the importance of it. You'll completely slip out. And it's easy to lack discipline, especially with emotions, which is this third part. If you are emotional, you won't even see the process. You'll be blinded by your own emotion. You won't even understand that loss is a step closer to helping you become the trader you promised yourself you'd be. You can't even see it. And it sucks because it's like, I know what that feels like. I know what that looks like. I know where I've been. I don't know where you've been, but it's probably similar. But it sucks. And we're going to go into emotions later in this video, but I'm just going to continue. After X series of iterations, so after how many repetitions, this is reps, bro. This is all it is. Just reps. You will have arrived at mastery. So over time, through the process, you will arrive to where you want to be. Your identity will naturally shift as you have embodied the traits of a successful trader as a byproduct of being grounded in the process. Realize you're a successful trader every day. You just stick to this simple system. And this isn't a trading system. We'll go into technicals later, but this is just the mental system. Deduce everything you're thinking in your mind to simply this. This is your life now. That is your process. It'll take 2 hours a day, 3, 4 even. If you want it to be longer, whatever. Just don't fatigue your brain and don't overdo it or think it. But understand this is all a successful trader does, and that's why it gets boring. And when it's boring, you're close, bro. As a byproduct of being grounded in the process. You are the process, and the process is you. Each outcome is accepted as this is a part of my process. Because you know each iteration is a step closer to mastery despite outcome. All right. So now we get into psychology. I'm going to take a moment, pause it if that's a lot for you, because this part is about to be a lot more. Go get some food, get a drink, get something, and we're just going to dive right into it. So this is the first mental schematic we'll go over, and that is trading psychology. Trust me, you think, oh, I need to know how a candle prints. I need to know how price distributes. I need to know the next new mecha model. I need to know how to do this when it does that. I need to know what entry model or entry drill I need to use. I need to see a rejection block above a fair value gap where there's obviously a point of interest on the order book and a point of interest on the book map within a PD array that's visible on the chart, and I need to know how to enter on that before it displaces to where I want it to go. You don't need to know any of that yet because none of that matters until you understand yourself and you're able to even capitalize on it. Because, oh my goodness, how you're going to feel when you know what's going to happen, but you take a loss because you just couldn't wait. You just couldn't think about just being an observer, just being a participant, but simply just, oh, I know what it's going to do. So it's going to do it now. No, bud. Calm down. Go to the gritty work. Go to where your mind is. Look inside yourself and realize the only way you're going to catch that fish is by understanding yourself. So, without further ado, let's just get right into it. So, what can trading psychology be deduced to? So, in my mind, for this mental schematic, is there's two separate frames of thought processes, right? So there's thoughts on you in the market, and there's thoughts on you and yourself. And that goes outside of trading. That just goes to who you are as a person. So first, we'll go over thoughts on you and the market. So when I brought you over here, you're thinking, "Oh, the market's buying and selling, the market's this that." No, it's not that. It's actually not. It's an emotional environment because whatever you're experiencing, no matter what it is, trading or inside of trading, outside of trading, you're going to experience emotions within it, and that's going to be your experience of it. See, someone could go to a trip across country and they can experience that trip, but then experience certain emotions on that trip that next thing you know, it frames their whole perspective on the place versus person B who experienced it a different way, right? So, regardless of what it actually is, location, environment, thing, whatever, how you experience it is ultimately what it's going to be for you. And this is kind of where people shoot themselves in the foot and they take themselves out of trading because their only experience of it has just been crap. And that's horrible. We want to avoid that. So, thoughts on you in the market goes to the emotions the market environment presents you: fear, greed, disorder, and no control. Fear is your brain's natural response to stress as a way to protect you. This can influence decisions in the marketplace. Greed, your brain's natural response to euphoria, a stimulated state that causes delusion and can influence your decisions in the marketplace. Disorder and no control. The market inherently is uncertain, and many traders chase certainty. Don't fail to recognize that when you lose yourself because of this environment, this creates a natural emotional response and can influence decisions in the marketplace. So, chasing control, avoiding fear, closing out early. Oh, like what other what other examples can I list where fear is present? You're close to daily maximum loss. You took a 2% loss. You took a 1% loss. I'm so afraid I'm going to lose the next trade. I can make it back right now. Fear leading into overtrading. Greed. You took a win. And these things go hand in hand. You could experience all these things every time you're on the chart. And understanding that they can influence your decisions in the marketplace, which is all you're really there to do, is to make a decision, stick to that decision, stand on that decision, and accept whatever happens with that decision. All of this is off the table as soon as you can accept the outcome. There's a very good Stoic quote where it says, "You rob discomfort and misfortune when you take away the feelings it presents you. You take away the mental model it puts you in." So all these things lack power over you as soon as you take away the weight you carry them. You give them, right? Like, "Oh, I took a loss. It's just one day, bro. Don't be married to the day. Let go." Each trade is independent on its own. So because there's one loss, that has no there's no reason why the next trade's going to be a loss. There's no reason, there's no correlation to that trade and the next trade you take, unless you overtrade where you're just clicking randomly. At that point, you're just gambling. Like I said, it influences decisions in the marketplace. There's no hot hand fallacy. There's a hot hand there's no hot hand fallacy, right? Like there's no, what is it called? The Monte Carlo theory. There's no correlation to the outcome of this decision and the next. So as soon as you take that win or you take that loss, let go of it. The only attachment there is at that point is your mind. And your mind is hand in hand with your performance. So if you can control that, you're green, bro. You're green. So thoughts on you and yourself. And let's just take a look at the mirror dichotomy. The market is going to reflect you. If you're impatient, if you're greedy, if you're fearful, well, you're just going to get the outcome of someone who's impatient, greedy, and fearful. But if you're grounded in the process and your identity is the process, and you know that to be true, you know you can take a loss and just be like, ah, whatever. I'm going to go hit a lift. I'm going to go eat some food. I'm going to go chill. I'm not even going to think about it anymore. If you're grounded in that calm, clear mind, then how you perform in the market's going to reflect that. But if you're grounded in, I need to make this back, I can't wait, I need it now. Oh, oh, there's this big trade opportunity. I need it today. I need to have whatever it is today. It's going to reflect. You will visibly see it happen on your account, and you will feel it, and then you'll just be left like in distraught, just like, why did I do that? Learn before it's too late. How you do one thing is how you do everything. Your underlying behavioral patterns can be found in the actions you take in your everyday life. So, being someone grounded in the process, if you can approach trading with this understanding, you can approach it at the gym. Oh, I hit legs. Oh, that exercise I tried that was new went well. I'm going to try it the next leg day. Next leg day comes, I incorporated a better leg exercise to my legs. Oh, I can't do that much weight. I should go down. Oh, that's a good amount of weight I just figured out. I should stick to it. Iterate, iterate. Next thing you know, your legs are huge. So, how you approach one thing can be said that that's how you're going to approach everything. For example, if you are in a scarcity mindset, everything in your life is going to be scarce. If you just have some insecurity where it's like, oh, I look horrible, I guarantee you that trait of insecurity, despite how you look, trickles into everything you do and just naturally lacking confidence. Anyone who knows that they don't look attractive, whatever, it doesn't matter, bro. I'm just gonna keep it a buck with you. You're a big dog, you're a G, it's whatever. Just take it to the chin, keep moving. Like, bro, understand it's gonna trickle into everything else. So if you come in with a mindset of like, oh, like I'm a pro. What does a pro do? He naturally takes everything seriously. He takes himself, herself seriously. It trickles into every facet of their life. These boom and bust cycles that many people experience is just them being aware of their ability to be in alignment with what it means to be a pro, but then getting ahead of themselves, not being able to ground themselves in those moments, a sense of delusion and euphoria. And we'll go over that later. So so the market will reflect these behavioral patterns to you in your trading. So since we're talking about trading specifically, for me, I had to highlight impatience. What is impatience really? If I can quantify it, it's a short attention span. Oh, I want class to be over now. I can't sit through class. Blah 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 blah. No, it's just because you can't sit in it. You're literally sitting. All you're asked to do is show up, bro. Why can't you just do that? So impatience is purely just a short attention span. And what tends to happen with a short attention span? When people doom scroll, it's by habit at this point for someone who's been doing it a long time. But how it became a habit is the fact that they had a short attention span and they needed something to fulfill the void of boredom. So they keep swiping. As soon as this reel just lacks its dopamine, I'm going to swipe again. I'm going to swipe again. I'm going to swipe again. That boredom on the other side of it, well, bro, like boredom has so many lessons. Boredom is why many people can't sit on the chart and wait for their setup. I can't tell you how many of these accounts over here have been blown due to boredom. Are you kidding me? Come on, bro. Everything you want is waiting for you. And all you're facing is boredom. Take ownership of the boredom and master it. What happens when you're bored and impatient and you have a short attention span? Poor decisions in the marketplace, you gamble, you force trades, you overtrade, you oversize. No longer trading probabilities, seeking emotions, and trading emotions. No discipline, impulsivity, short-term satisfaction. So when you lack discipline, what does that pretty much mean? You're impulsive. You say you're going to do something, and then something comes in your head, and you're like, oh, I want to do something else. So you just drop everything you just said because something in your head just took over, and you just decided to do that. Short-term satisfaction, lack of discipline. When you opt for short-term satisfaction, in contrast to delayed satisfaction, delayed gratification, then you pretty much aren't built for this. And the only way to be built for this is to build that discipline. Like, oh, I want to have this much amount in equity right now. Come on, man. It's very simple when you really think about it, guys. What does that lead to? Poor decisions in the marketplace, gambling, forcing trades, overtrading, oversizing. No longer trading probabilities, seeking emotions, and trading emotions. Awareness of yourself. This is pretty much the only way to master your psychology. Why? Because awareness of yourself allows for reflection. When you're aware of yourself, you're able to reflect on yourself and your behaviors. Thus, you're able to correct them. What does this sound like? This sounds like the iteration process. Reflection, journaling, learning. You're able to learn from the outcome. You're able to be aware of what just happened. And you're able to iterate it, make something out of it. Realize that some of these losses is actually your key to understanding and ultimately winning long term. And you can only understand that if you're able to be aware and reflect. Discipline. So upon reflection, you can build discipline. The course for correction in your behavior is discipline. It takes discipline to sit down and reflect. Some people don't even have the attention span to think critically like you do. It takes discipline to even do that, to even feel something about it, to even care. Course correction is made through this. So when you can reflect, you can have discipline. Why? Because you can reflect on something and then you can make a better decision off of it and then you can stick to that decision. It's a habit that compounds. You do it once, you do it again. It gets tricky here, but you still do it because you did it those past 2 times and it just builds. Like going to the gym every day and it gets to a point where, wow, I feel so eerie on missing the gym today because I've just been going. That's where discipline becomes automatic. Upon discipline, you gain control. When you have self-awareness, you can hold yourself accountable for outcomes when outcomes are outside of your control. A little typo. What do I mean by that? When you have self-awareness, you can hold yourself accountable for the outcomes outside of your control. Okay, we'll just go back here real quick. Outcomes outside of my control. But by awareness, I can be accountable for the outcome. Why? Because there are things inside of my control, like iterating, like learning, like journaling, like taking something out of that loss, walking away with something outside of that loss, walking away with something outside of that win. That's inside of my control. And if I'm doing that, despite what's happening here, it's inevitable. The only way it's not inevitable is if you don't have a profitable strategy and you just have the wrong psychology. But how is that going to happen when I'm right here, bro? Come on now. We can go over gambling. It's already 40 minutes. There's a lot more to go over in this, and I'll probably split this up into another video. But for now, that's this first take on this series. And that's in one take. I'm not going to edit this. It's just going to come out the way it is. But yeah, Be a good boy and follow rules. Um, be a good boy and fall into the process. Be the right person at the right time with the right opportunity. How can you be the right person? You ground yourself in the process. You strip everything a part of your identity that's attached to people, situations, past, future, and your needs. And your identity is now the process. This is who you are, and this is what you're going to become. And it's as simple as that for this first video. All right, guys, take care.